Hello everyone, welcome to Inconvenient Truths. I'm your host, Jennifer Zeng. You might have read the news that ratings agency Moody's just cut its outlook on China's credit ratings to negative from stable today. The reason was that the real estate bubble burst could trigger a local government debt crisis at any time. It has long been a consensus of many that China's local debt is the next crisis to erupt. But when exactly will it break out, and is there a more accurate point in time? Today, let's discuss this billion-dollar question. When will China's local debt explode? Let's look at the calculations made by a Chinese economist called Lao Man. First, let's look at the scale of local debt. These figures are all from the official data of China's Ministry of Finance. Take a look at this table. Starting from the left, the columns are the year revenue, expenditure, fiscal deficit, central government transfers to local governments, and the absolute gap in local finances, which is the shortfall after central subsidies. From this table, we can see that over the years, local governments have been in a state of severe deficit, with expenditure always exceeding revenues. As China implements a tax sharing system where the central government takes most of the tax revenue, the central government provides some subsidies to the local government, known as transfer payments. The second column on the right of this table shows the transfer payments allocated to local governments by the central government each year. So the far right column represents the absolute financial gap of local governments. This is the funding shortfall that still exists after central government transfer payments. As we can see, this gap has always existed and has been expanding. In 2016, the absolute deficit in local government revenues and expenditures was nearly 1 trillion yuan. By 2022, it had risen to nearly 5.7 trillion yuan. In just 6 years, this gap has expanded by 2.8 times. If we attribute the large gap in 2022 to the economic collapse caused by lockdowns, then in 2023, despite lifting the lockdowns, the situation has not improved. In the first 3 quarters of this year, the absolute deficit in local finances has already reached the level of 3.6 trillion yuan, with the annual fiscal deficit still expected to be around 5 trillion yuan. It must be clarified that the financial expenditure data listed here does not include the principal payments of various states of local government, but only includes the expenditure on interest payments. That is to say, the absolute deficit in local government revenues and expenditures is not caused by debt repayment. Even if they don't pay a penny on the principal, the absolute deficit will continue to expand. This gap must be filled by issuing local government debt. In other words, this year's net financing scale of local governments is still as large as 5 trillion yuan. Local governments issue bonds through 2 main channels. The first is official local government bonds. This is relatively standardized and is issued uniformly by provincial finance bureaus on behalf of various cities. It enters official fiscal regulatory accounts for specific purposes. These bonds generally use standard contracts with standardized terms for loan duration, repayment method, and interest calculation rules. So as As of the end of September this year, the stock of local government bonds was 38.9 trillion yuan. The second channel for local government bond issuance is the chaotic urban construction investment bonds. This is completely unstandard, with each city issuing bonds independently and contract forms varying widely. There are no standards for debt duration, repayment methods, and interest calculation rules. As of the end of September this year, the stock of urban construction investment bonds was 16.7 trillion yuan. Therefore, if we connect all the data on these two types of bonds, including how much is issued each year, what the interest rate is when these bonds mature, and how much principal and interest need to be repaid upon maturity, etc., and establish a mathematical model, we will be able to work out the amount of bonds that have to be repaid each year in the future, as well as the funding gap that must be made. Due to the lack of officially unified data, connecting and compiling such data is a vast, arduous, and tedious task beyond the patience or capabilities of most people. Fortunately, Lao Man has painstakingly completed this work for us. He mentioned that in 2016, Chinese local governments issued a total of 1,159 local government bonds. So, compiling such a large amount of data is a very arduous task. Therefore, he randomly selected a 5% sample to establish a mathematical model for his calculations. He verified the accuracy of this method and found that the difference between it and the actual data is only within a plus or minus 1.5% margin. This means that calculating with only a 5% sample already guarantees sufficiently high precision, and the conclusions are entirely credible. Now, let's look directly at his calculation results. First, look at the top row, which are the figures up to September 2023. The rows below are the projected figures for future years all the way to 2040. You can see that in 2023, the pressure to repay debts is as high as 5.1 trillion yuan, of which 3.7 trillion yuan comes from the debts in 2016 maturing, and 1.4 trillion yuan is the cumulative amount of debts maturing scattered over the subsequent years. You can see that the scale of refinancing bonds issued in the first 3 quarters of 2023 is only about 3 trillion yuan. This means that in the fourth quarter, an additional 2 trillion yuan of local government bonds need to be issued just to meet the debt repayment needs of local government. At the same time, as we mentioned earlier, local government still have a revenue expenditure deficit of 5 trillion yuan this year, which also must be met by issuing new bonds. So up to September, only 4.1 trillion yuan of new bonds have been issued. So there is also a gap of 1 trillion yuan here. This means that in the fourth quarter, a total of 3 trillion yuan needs to be issued in 3 months, equating to 1 trillion yuan each month, just to ensure local finances don't encounter problems. This pressure is enormous. On August 21st, due to a liquidity shortage in the interbank lending market, the overnight borrowing rate skyrocketed to an annualized rate of over 50%. Such a high rate indicates that the market is facing a severe liquidity challenge. However, just surviving this year is meaningless. Look at the fourth column from the left. In the next 2 years, the amount of local debt that must be repaid is still as high as 4 trillion yuan, only 1 trillion yuan less than this year. And in the 5 trillion yuan of net revenue expenditure deficit, the total annual insurance needed will still remain high at 9 trillion yuan. This means that even if the Chinese government survives this year, it will be very difficult for them to survive the next 2 years unless the central bank prints money without any restraint. Otherwise, the financial system cannot survive through 2024 and 2025. Even if China's central bank survives 2025 by printing money out of thin air and creating inflation, it won't last many more years, at most until 2030, when the pressure to repay principal surges again, rising fiercely to over 5 trillion yuan. And this calculation assumes that the net revenue expenditure deficit scale remains at 5 trillion yuan each year. In reality, the only way to survive through 2024 is for the central bank to print money out of thin air. If the central bank can still get through the debt pressure by 2030 by printing money, then the next wave of pressure will crazily hit after 2023. By then, there will be no more buffer period, and afterwards, it will be the ultimate moment of continuous massive debt repayment pressure. Lao Man says, in fact, he doesn't believe the central bank can last until 2033. The wave in 2030 is theoretically the deadline for collapse. Note that this is the death limit calculated using the relatively standardized local government bonds, which is 2030. The above is only the situation with official local government dates. But what would the situation be like if we add the chaotic urban construction investment bonds? First, let's look at the insurance scale. Please look at the third column from the right, which is the stock scale. In 2014, the stock scale was 4.8386 trillion yuan. By September this year, it has risen to 16.71 trillion yuan. In just 9 years, it increased by 2.4 times. Based on this data at the same 5 random data sampling ratio, Lao Man calculated the following results. His verification results show that the deviation from the actual data is generally around plus or minus 10%, so it can be considered a good reference. Here are the calculations up to 2040 by Lao Man. He says we don't need to look beyond the next year, 2024, because the urban investment bond game will already be unplayable by then. Why? First, let's look at the data for the first 3 quarters of 2023. In this period, urban investment bonds had already issued over 4 trillion yuan. However, to cope with the upcoming principal and interest repayment pressure, nearly 7 trillion yuan must be issued in 2023. This means that an additional 2 trillion plus yuan needs to be issued in the fourth quarter. In October, due to increased auditing difficulty, only 370 billion yuan was issued, already bringing immense pressure to local governments. The remaining nearly 2 trillion yuan must be issued in November and December, averaging nearly 1 trillion yuan per month. However, this is not the worst part. Starting from 2024, due to the large-scale maturity of urban investment bonds issued in previous years and the maturity of short-term bonds in 2023, the principal repayment scale of urban investment bonds enters a nightmare mode. The repayment scale exceeds 8 trillion yuan in 2024 and over 10 trillion yuan in 2026. So, Lao Man said we don't need to look any further. Local governments definitely cannot come up with this money, and the financial system doesn't have the liquidity to cope. This is a result of combining the data of urban investment bonds and local government bonds. Please see the fourth row for the first 3 quarters of 2023, the combined issuance of local governments has already reached about 11.7 trillion yuan, close to last year's annual scale. However, 17 trillion yuan must be issued annually just to barely meet this year's needs. This means that about 5.4 trillion yuan still needs to be issued in the fourth quarter. In October, 1 trillion yuan of local bonds and urban investment bonds combined were issued, and the central government also issued 1 trillion yuan of special national debt to fill the gap in local finances. That's 2.6 trillion yuan, but it's still far from enough. An additional 2.8 trillion yuan is needed to overcome the immediate crisis. The 2.6 trillion yuan of local bonds and the special national debt issued in October have already drained the liquidity of the financial system. Now, in November and December, another 1.4 trillion yuan each month is a disaster for the fragile financial system. Even if this immediate disaster can be overcome, the system cannot survive next year. The combined principal repayment pressure in 2024 will reach a level of 12 trillion yuan. This amount is too large and the time is too soon. The data used to calculate the result for 2024 is already existing data, so there is very little room for model projection errors. Every year thereafter, this severe debt repayment pressure will persist until 2030, rising to about 18 trillion yuan. Can you imagine the scenario where the central bank prints more than 10 trillion yuan of base money every year to help local governments repay debts? More than 10 trillion yuan of base money, even with a 4 times money multiplier, corresponds to more than 40 trillion yuan of circulating money. As of the end of September, China's total money supply M2 is only 290 trillion yuan, and in more than 40 trillion yuan of flow into this money pool in 1 year. Can you imagine what will happen if this really happens? Therefore, Lao Man believes that in less than 2 years, the renminbi as a legal currency can be destroyed by the central bank itself, turning it directly into waste paper. So through his careful calculations, the conclusion is that without urban investment bonds, China will struggle for the next 3 years, barely surviving on the central bank printing money out of thin air. It can probably last until 2030, which is the ultimate deadline. However, the deadlock of urban investment bonds since their issuance in 2014 has strangled the Chinese economy's neck. Now, the situation is just like this. Just like a person whose neck is already strangled, but the support underneath his feet has been taken away, and his two hands are both tied up. This is the situation of the Chinese economy, standing on a cliff with urban investment bonds as the death chain around its neck. Even if China's economy struggles through the last 2 months of 2023, 2024 will still lead to suffocation and death. The real solution? Lao Man says the first step is to untie the bound hands. Freeing one hand means giving private enterprises the same status as state-owned enterprises, and freeing the other hand means giving the public the power to participate in and supervise the government. But are these two steps possible? We all know it is not possible whatsoever, right? So Lao Man said there is no point in discussing how to resolve the debt pressure. What everyone can do is to just quietly await the final moment. Fortunately, it won't be a long wait. Local government debt will definitely explode within the next year with no hope of salvation. Since Lao Man's calculation was based on solid government data he connected and a very reliable mathematical model, so I think his conclusion is very sound and reliable. It doesn't need much high-tech to draw this conclusion, just some painstaking collection of data and some very simple calculations. The numbers may seem dry, and you can go back to check them if it's necessary. I think they are very valuable. For those with economic understanding, they are very significant and foretell the inevitable bankruptcy of the Chinese economy. Well, that's all for today. If you find my content valuable, please support my sharing. Please support me by sharing my channel and videos. You might also want to visit my website, jenniferzengblog.com, to sign up for membership or make a donation. I regularly post the scripts on my shows in the members-only area on my website. This is for those who prefer to save time by reading the script instead of watching the video. You can visit my website to join this service. Thank you. See you next time.